everyone, welcome and happy International Women's Day. I'm Jane Yamakin, NCJW's Field Services Manager. We're thrilled to welcome all of you to our NCJ Webinars Leadership Series today. This series is available exclusively to our leadership network and dedicated to creating an online space to connect, learn together, and provide leadership training and skills. We're so excited to learn with Paula Garret and Patty Rubin today. In the next hour, we'll cover budgeting, audits, financial reporting, and more, benefiting from Paula and Patty's combined 80 years of experience in finance. A few housekeeping notes before we get started. Please list your name, section, and pronouns in your Zoom name and introduce yourself in the chat. Everyone's mics are muted to prevent background noise. To enable closed captioning, please click on the CC or closed caption button on the bottom of your screen. Please ask questions as they arise in the chat box, and we'll do our best to answer them as we go along. We'll also have plenty of time for questions and answers at the end of the presentation, including those that were submitted by you on your registration forms. We encourage you to play around with view options, which will allow you to adjust your screen and zoom in on any small font or wording. We'll also be sharing this recording of the webinar, and we'll upload it to our website for those who were not able to attend today and for your reference anytime you might need it. We do encourage you to reach out if you are having any technical issues, although please note that our limited capacity to address issues while the webinar is running. With that, it's my pleasure to briefly introduce our speakers, Paula Garret and Patty Rubin. Paula Garret has a broad background in nonprofit organizations. Currently in her second term as NCJW Treasurer, Paula chairs the Finance Committee, which includes the Investment Committee, Audit Committee. Paula is a past president and treasurer of the Pittsburgh section, currently serves as the section's treasurer. Until her recent retirement, Paula was CEO of a privately held manufacturing company in Pittsburgh. Patty Rubin also recently retired from a 40-year career in public accounting, where she focused on providing audit and consulting services to privately owned businesses and nonprofit organizations, including social service agencies in the Jewish community and greater community at large. Patty is a CPA in Ohio, where she's an active volunteer in a program that promotes financial literacy and awareness for women who find themselves in precarious financial situations. Please join me in welcoming Paula and Patty to lead us in this important session today. Now it's my pleasure to turn the webinar over to them. Take it away.
Good afternoon, everybody. So welcome to Making Sense of All Things Financial. As Jane just mentioned, we're asking you to just put your questions in the chat as they come up. And what we'll do is either Jane or Lindsay will signal us. Patty and I will stop before we turn the page, as it were, and we'll answer your questions then. If that gets a little bit too crazy, we'll do it at the end. But regardless, your questions will get answered today. That's the goal of today, is not only to share information with you, but also to help you and to give you answers to questions. So without further ado, whoever is the magic behind the screen, thank you. Okay, so let's start with what our role is in terms of managing or the oversight of NCJW finances. So whether we're a president of a section, a finance chair of a section, a treasurer of a section, a member of the finance committee, or a member of the board, our responsibility is the oversight and management of our section finances. There's 4 aspects of it that Patty and I will be going through today, and Patty and I are going to ping pong back and forth a little bit. I'll do a couple of slides, and then Patty will do a couple of slides, and then it'll bounce back to me. But the 4 things we need to be aware of, and we need to ensure the accuracy of our financial statements. We need to build financial literacy in each of our sections among our board members. We need to be assessing the financial health of our section, and we'll talk more about each of these 4. And as importantly, we need to balance mission and money. Where we are spending our money and how it supports our mission is critically important. And these are all functions that we serve as managers of NCJW finances. Does this make sense? Any questions before I move on? Okay, let's go to the next slide. So here's where it gets a little tricky, so bear with me. If you are from a section that has both board and staff, I'm going to go through this chart with you. If you are from a section that doesn't have staff or has only limited staff, the column marked staff responsibility would typically fall to the finance chair or the finance committee or an outside accounting service. And I'll go through that with you. So let's start with what the board's responsibility is vis-a-vis finances. So the board's responsibility is to approve the strategic plan, which is how we spend our money and on what we spend our money. The board is responsible for approving the budget, not putting the budget together, but approving the budget. The board is responsible for the approval of internal controls. Patty's going to go into what we mean by internal controls. I will tell you that the board is responsible for making sure that those internal controls are in place and that they're followed. The board is also responsible for the review of interim financial statements. You'll hear me say now and probably at least twice more during the seminar. It's our responsibility to review the finances of our sections at least quarterly. The larger sections where there is an active finance committee, for example, and a treasurer will typically look at the finance statements, at the financial reporting package every single month. But for medium size and smaller, you do it at least quarterly at the board level. And even for the larger sections, you want to do it at least quarterly at the board level. The board is also responsible for setting up a finance committee and/or an audit committee. I know some of our sections are too small to have audits or a review or even a compilation. And again, Patty will go through the detail of what those 3 different types of audits are. But no matter what your size, it is best practice to not only have a president, but also have a finance chair or treasurer, whatever title you want to use. And that person should set up a finance committee. Finance committee can be as few as 3 people, but there needs to be a balance. The board is also responsible for hiring an audit, reviewing the audit, and approving the audit. And finally, it's the board responsibility to review the IRS tax form 990. You don't have a 990 because you're so small, you're just literally doing the postcard. It is still the board's responsibility to review that. Now, turning to the staff responsibility, and again, if you don't have staff, think of this in terms of your finance chair and your finance committee. So that committee is responsible for providing accurate and timely financial information. In the smallest of sections, I would encourage you to have an outside accountant put together your statement of activities, which is your income statement, and your balance sheet. The staff, or again, the finance committee, is responsible for recommending and enacting internal controls, which we'll go into more detail on, and maintaining and reviewing financial reports. And probably one of the most critical functions is using finances in strategic decision-making. And that's as simple as understanding whether or not you have the money to launch a new program, where the money's going to come from, how you're going to raise the funds, what you need to spend. So that's using finances in a strategic decision-making process. Launching new projects would fall under that as well. And then in the smaller sections, the committee would make the recommendations, it would go back to the board, and the board would sign off on it. So there's always an interplay, whether it's between the board and the staff, or between the board and the finance chair and the finance committee. Are there any questions about what I just flew through? Jane or Lindsay, do you see any questions in the chat?
Nope, they are riveted and we don't have any questions yet.
All right, so let's go on to the finance committee. So here specifically, I mentioned that every section should have a finance committee, and don't be overwhelmed by it. It could be as few as a couple people. In the larger sections, it's going to be a robust group of people who are going to include typically accountants, CPA, finance people, investment people. That's typically what you want to look for in finance committee members, regardless of the size. So the Finance Committee is responsible for reviewing and approving the annual budget. Unless you're a very small section, the Finance Committee isn't going to be putting that budget together. That budget will be put together if you're a mid-size and a large section by either an accountant and or your staff. The Finance Committee is responsible for reviewing the financial results. So when I say financial statements, I'm talking about a statement of activities, also known as an income statement, as well as a balance sheet. Ratios of financial health are things like making sure your current assets equal your current liabilities, making sure that you're not underwater, essentially, that you're not spending more than you have on hand. It's looking at the cash flow forecast and your existing cash flow position and doing projections in terms of, for example, we are 7 months into our fiscal year. And most of our sections at this point should be looking at their budgets and doing a determination of whether or not they're going to be able to make the budget, meet the budget, exceed the budget, or if they need to make adjustments. You wouldn't make an adjustment to the budget so much as you would make adjustments to your spending and or your programs. That all rests with the Finance Committee that makes recommendations to the board. The Finance Committee is also responsible for making recommendations to the full board regarding banking and audit relationships. If you run a small business, if you're involved in a business of any size, one of the most important relationships you have is with your bank. And that should be true of sections too. Don't think of a bank as only the place that clears your checks and holds your deposits. It should also be, you should also have a relationship manager at the bank, somebody you can talk to, somebody who can help you if you need a line of credit, for example, because you intermittently can't meet your cash flow needs. Having a relationship with a banker enables you to pick up the phone and ask for that. You also want to set up a relationship with a banker so that if you inadvertently have insufficient funds to cover a check, the bank will cover it for you, knowing that they can make arrangements through you and they have a trust relationship with you. So I can't emphasize that enough. The Finance Committee also assesses and provides guidance to the board to strengthen the long-term financial health and sustainability. In other words, this is the group who says, "Ooh, wait a minute, we are running very, very tight to our cash. I'm worried about our future sustainability, or we're not raising the amount of money that we raised last year." In other words, this is the group who is on at least a quarterly basis. See, I told you I'd mention it at least twice. On at least a quarterly basis is looking at your statement of activities, which is really the performance of the section. And then finally, the Finance Committee is responsible for reviewing and improving financial controls, internal controls. Any questions? Very quiet group. Okay, Patty, will you get into internal controls for us?
There was a question just to me, but I'm going to answer it for everyone. Someone asked if the slides will be shared after. Absolutely. We'll send you the recording and the slides following today.
Thank you. Good afternoon. When you think about internal controls, you want to think about what makes good sense. Some of it is, a lot of internal controls is common sense. There's lots of, books written, articles written about what does the proper internal controls. But if you think about it, is you really don't want to have one person to have access to too many things, especially in relation to cash. So you don't want to have one person who does the bank deposits, opens up the mail, tells, records in the books and records who has made a donation, prepares the bank deposit slip, takes them out to the bank, gets the bank statements at the end of the month, and reconciles the bank. Because that is one person who is seeing the cash from start to finish. And then if you add in, if that same person also approves the accounts payable or any bills that come in to be paid, writes the checks to whoever it is needs to be paid, and worst case scenario would be signs those checks. So now you've just created an environment where you basically have I'll call it a one-arm paper hanger, where one person is doing every single thing inside the accounting world with no checks and balances. So depending on the size of your organization, you want to insert into that process from, sort of cash receipts to cash disbursements, soup to nuts. You want to insert additional people along the way to make sure that no one person has too much control. So some of this, and this would be no matter what the size. If you're running your organization with no paid professional staff, and you have a board chair and you have a finance chair, you want to make sure that each of them has separate responsibilities that provide the checks and balances to each other, so that things are happening correctly. If you have a much larger organization, oftentimes you'll find the finance chair or the treasurer will be coming in to sign the larger checks, and that provides a level of control to make sure that no one person has too much responsibility. So if you think about, you want the controls to not be too restrictive for the size organization that you're running, but also provide you with an appropriate level of control. So things you want to think about is who approves invoices and who signs checks. It's ideal if the person who approves the invoice is not the person who's signing the checks, or is the person who is making the purchases not the person who signs the checks. Having more than one check signer is also a good idea. Obviously, in this year that we've just finished, with movement being so restricted, a lot of organizations have one check signer. But what you can do is, I'm the board chair of a very small Hillel, where we let the executive director sign checks. But what she has to do for me is she has to sign me. She sends me emails on every single thing that she's doing. So at least I am seeing it, and I have access to the bank statement, where I log on once a week and I scroll back through the bank statement and I look at where the money's been going. So that's another way to implement a cheap, easy internal control that doesn't require that much work. We also have a third-party accountant. So having a third-party accountant who's also overseeing things is another good way to have improve your internal controls. As far as the independent payroll service, I practiced accounting for a very long time. I will tell you, if you have paid employees, independent payroll services are the cheapest service to keep you out of hot water with the IRS. It's usually dollars, $10, $20 a week at the most. If you only have 2 payrolls a month, it's not very expensive, and it's a really, really good way to make sure that everything you're doing payroll-wise is being done properly with the IRS. It's sort of cheap insurance to get you where you need to be. So I highly recommend independent payroll service. Paula's talked about review of internal controls. Review of financial reports. One of the things that you want the finance committee to be doing is comparing financial information month over month and year over year, because once you start to do it and you've done it a few months, you'll start to see, oh yes, that payroll number looks right. Oh, that payroll number looks way out of line. What happened? And you ask a question, and they'll come back and they say, well, we make payroll every 2 weeks. This was the 1 week. There's a couple months where you have to have 3 payrolls in a month, and it's an explanation that is plausible, that you can go back and look at the calendar and say, oh, you're right, there were 5 Thursdays. We pay on Thursday, so we had 3 payrolls in the month. So board review of financial reports is a very, very important internal control. Again, doesn't require any additional funds. Once you start to do it, and you do it month after month, you get into the groove of it, and you'd be surprised about how quickly anomalies will just jump right out at you. So it's a very, very effective internal control. It's an after the fact control. So if you go back and you think about 1 check signer versus 2, that's live, real. Nobody is going to be able to get that check out the door that isn't appropriate, isn't for the right amount, because 2 people are looking at it. Review of financial reports is also an internal control, but it's after the fact. And what that would help you do is make sure things are being put into the right buckets. So rent is rent, payroll is payroll, and you know that it's been coded properly. If you're tracking programming and you really want to see if a program was covered, it's not, you look at it by reviewing the financial report. So there's internal controls in real time who approves checks, who goes to the bank, that kind of thing. And then there's after the fact controls, which is like reviewing of financial reports and reviewing of bank statements. So you need to make sure that you have I would say the appropriate level of internal control, and you need to make sure that you're using technology, because technology can be such a benefit. Or you can do so many things electronically now that, 2 years ago were a challenge to do. Any questions on internal controls?
Yeah, we've got a couple about checks actually. So the first is, if the treasurer is writing the checks, should she be one of the 2 check signers?
Ideally, no. If there's 2 check signers, then yes, it's fine. But if ideally, no. It's just that's a little tricky right now in COVID, though. I mean, I don't know if people are going to be running around. So what you want to make sure is that someone else at least knows about the check. And the one way, if you need to have the treasurer write and sign checks, I would want the board chair, assuming there's not a paid staff, the board chair to be looking at the bank statement every month, having a log on to the bank, making sure they're looking at the bank statement, and obviously doing a financial review of the financial reports.
And is it absolutely imperative to have 2 signers for your checks?
My answer is no. I don't think it is. There's a couple of ways people do it. One is, especially with some organizations using online bill paying or writing electronic checks, you can't have 2. And the banks really, you could say that you have like everything over 500 requires a second signatures, but really the banks don't look at it. So it's really up to the organization to have the discipline, because the banks, the way they process checks nowadays, it just goes flying through. They would be liable if you did have a second signature requirement. I feel that, in my opinion, this is just my personal opinion, it's a little bit of an antiquated idea because the world is so electronic. So it is not imperative.
Excellent. Thank you for that, Patty. And then also similar to what you were saying in terms of things going electronically, would you suggest a procedure to sign the checks if the checks are sent electronically?
So I would want to have some sort of electronic approval. It can be as simple as email, like, Jane, I'm going to send out this check for the rent. It's $500, or I'm making this donation, or, we're sending a Shiva tray, whatever. Remember credit cards is another way to control it, because if you put it on the credit card and then someone reviews the credit card bill, that is one way. The whole idea is to have somebody else taking a look at it, but I think electronic approval through email is becoming a perfectly acceptable way to conduct business.
Great. So you have a paper trail either way.
Yes.
Great. And then the last one on this section, we have a small section. Must we have a finance committee, or can our presidium all act as the finance committee?
Let me take that one, Patty.
Yeah, please take that one.
From a best practices standpoint, you really need to take somebody and give them the responsibility for the finance part of the organization. The president, even if it's 3 presidents who are co-presidenting, I think I just made up a new verb, who are co-chairing the section, there should still be one whose primary focus is finance. That's best practices. You don't want to have 3 people sharing one responsibility in addition to that of sharing the presidency. It's just not a good idea, or 2 people. You want to have one functioning as the president or a co-president, and then you do need to have one person overseeing the finances. It's simply best practices.
Also, I know that in the state of Ohio, a 501c3 has to have a president, a treasurer, and one other office.
Yes.
It could either be a secretary or a vice president, but that is the Ohio law. So that's another thing to consider, is that you really might need to be in compliance with your state law, you might need to have those 3 titles.
And again, much of this is common sense. You really want to think about splitting responsibilities. Patty, did I cut you off? I didn't mean to.
No, I was just going to say, I agree with you. It's common sense. And it's something like, you could say, well, I'm not good at finances, but anybody who's good at even budgeting, if they even are budgeting their own household, they can do, if you're a small section, you can do it. I mean, and if you think about the whole logic of why you want a second person, or you need 3 people involved, is that everybody wants to think, this kind of is closing out the internal control thing, but everybody wants to think that nobody would steal. Nobody would steal. I can tell you as an auditor, people steal. and you don't think it's going to happen, and you don't think it's going to be happening to this small little organization, and it does happen, and it's very upsetting when it does happen. And some simple internal controls can just give everybody peace of mind by having no one person having too much control. So I don't wanna-
And also people make mistakes inadvertently.
right.
They really do. And if you have that type of division, it's going to be caught. The president is going to look at the financial statements that somebody else has prepared, and she's going to have a question, and she's going to catch a mistake.
And then the other, and we're going to get into budgeting a little bit as we move on, is think about somebody also could have their pet project that they've just been doing for 10, 15, 20 years. And they want everyone to believe that it's either cash flow neutral or cash flow positive. And a separate set of eyes might have somebody challenge an expense or saying, really, we're spending money on that. And, we only raised this much for your program. And, or maybe the answer is yes, we understand we're spending more on that program because it's so important to our mission, but it's just giving people an idea to just challenge and make sure the right decisions are being made. So with that, we're going to talk about the elements of a financial package, and I'm not going to give you, the training you need to take a CPA exam, but but I will tell you there's two basic statements. There's the income statement. In the nonprofit world, it's often referred to as a statement of activities, and there's the balance sheet, which also could be called the statement of financial position. And they serve two very different purposes. The income statement captures your performance, the money you raise and the money you spend over a 12-month period of time, typically done in 1-month increments. A balance sheet is a point in time. It gives you where you stand at a point in time, December 31st, March 31st. It says, where are we today? What do we have in cash? If we have any, if we owe people money, what do we owe people? And what do we have left in our net reserves after we take what we have in cash or assets, if we own a building, if you have office furniture, and what do we owe? Do we owe any payroll taxes? Do we owe any vacation accrual? Do we owe anything like that? And then what do we have left? So the income statement is measuring performance over a 12-month period, and is typically how the budget is done, is based on the income statement. And the balance sheet is a point in time of where do we stand today. Let me go to the next slide. Okay, so the way this one's really busy, and let's see who's going first.
Go ahead, Patty.
I'm going first. Okay, so on the left-hand side is the statement of financial position, which is I just called the balance sheet. On the right-hand side is a statement of activities, again, an income statement. And this is done in classical, generally accepted accounting principles way. So this is like the best of how you would present it. You guys might, a smaller section or a section with less activity might not have all of these elements to it. And so it might feel overwhelming if you're not, if you don't do this every day, but there's not that many sections of this. So I'm talking about the left, the statement of financial position. You start out with your assets, what you own. So cash would be, cash and cash equivalents would be the money you have in the bank. Donations and grants receivable would be where somebody has pledged money to the organization, to NCJW, and hasn't yet paid it, or a grant has been granted to you, but you either haven't met the requirements of the grant yet, or just the timing is, sometimes someone will notify you in March that they're going to give you the money in May. So that would be a grant receivable. Other receivables are just little things that could come up around over time. Prepaid insurance. I'm guessing many sections don't track prepaid insurance, because your insurance policy, you may pay like at the beginning of the year for your building insurance and then spread it out over the 12 months. Fixed assets are things you own. Office equipment is the main thing. We wouldn't typically see an NCJW section with much in the way of fixed assets, because even if you do have office space, you probably have a very, I'm guessing your office furniture is probably fully depreciated. It's been there long enough that it doesn't owe you anything. And then long-term investments would be any money that you would have invested with typically with a money manager, where you would have your money at Charles Schwab, or you'd have it at the bank, but it's money that you're saving for a rainy day. And that's your total assets, in this case, 416,000. Moving to liabilities, I'm going to go through this a little quicker because I'm guessing most sections don't have a lot in the way of liabilities. Accounts payable are bills that you have received, but because either they're not yet due or you haven't yet had an opportunity to pay them, that's the amount of unpaid bills you know about, and you have the amounts from your vendors. Accrued expenses are things like accrued rent, if you haven't paid your rent, accrued vacation, things that you don't actually have a piece of paper from a vendor, but you know you will owe it in the future. And current portion of long-term debt is what you would owe in 12 months, in the next 12 months. Long-term debt is what you owe in more than 12 months. And as far as this net asset section, I think in the interest of time, I don't think I'm going to spend a lot of time on it, Paula, unless you disagree with me. That's what's left after you take your assets, 416,000, you subtract your liabilities of 53, and you subtract your debt of 8,500. And that's the generally accepted accounting principles or GAAP way of breaking it all down. And honestly, I'm guessing there's, unless you have if you have an outside auditor, they're doing this piece for you. And we can talk about it at the end if we have time. But I think we should skip that piece in the interest of time, Paula, if you agree.
Okay.
Okay.
So yes, thank you, Patty. So let's look at the statement of activities. Patty and I are always teasing with each other because I love the statement of activities because it's a quick glance as a treasurer or as a president as to how the section is doing this year. So what we put up in front of you is a very simple income statement or statement of activities. So it lists at the top all of the sources of money that you have coming in, whether it's contributions or foundation grants. If you do a fundraising event, this one has the fundraising event set up, which is the third line as net, which means that the expenses have been deducted. That doesn't have to be that way. You can have it, you can have just the money that you brought in up there, and under expenses, you can list the expenses for your fundraising. So when it says total support, that $191,000 is money that came in where there's absolutely no restrictions. Typically, if you raise money for a special event, for example, more and more sections are doing back to school stores, and we're raising money as a section for, clothe a child this year. That money has a donor restriction because it is specifically for that program. Other contributions or grants we might get would be unrestricted. And by unrestricted, it means it's the column that says without donor restrictions. It's just that. It's somebody wrote you a check, you raised money for NCJW Pittsburgh section, period. And that's considered without donor restrictions. So at a very basic level, we're looking at the money that's coming in, which is support and revenue. The total of this example, this example is 298,000, which is on the far right corner, about halfway through. And then you would list your expenses. This is the basic statement of activities. I like to see one that not only has those three columns for the current year. On the same sheet of paper, I would like to have 3 additional columns, which are going to show me a year over year for the 9 months, and then is going to show me a budget versus what we've actually done. And then the last would be a variance against the budget. This would be, what you're looking at here would essentially be a dashboard, which would go to the board because it's a very high level look. If you're a small section, this is all you need. If you're a medium or a larger section, you're going to want to break out each of your programs, for example, might have their own individual statement of activities where you say, and I'll use the back to school store example again. We decide our goal is to clothe 1,000 children. So we need to raise the money to buy the clothing for 1,000 children. So the expenses for that type of event would obviously include anything from promotion to calling people to having an open session about what this is about. And then the revenue obviously would be from local foundations, grants, as well as individual contributions. So if you're a larger section, you would do the same type of report and you would do it for your larger programs. So you've got essentially support and revenue is the money that's coming in. Expenses is the money that's going out in the current year. The increase in net assets, which is about, oh gosh, 3/4 of the way down the page, and it's in bold. That really is your income. That's how much money you've made this year. And year to date, this section, for example, will have made $88,061. And then there's a comparison for where were we at the beginning of the year and where were we at the end of the year. Again, this is a very simple, high-level dashboard for the larger sections. For the smaller sections, this is all you'd need to do. It's revenue, less expenses, and it gives you your net operating income. Any questions that came up, Jane?
Yeah, Paula, so we have one question. Do we need to see the net impact of our programs on the statement of activities, offsetting the revenue with the expenses of the program?
If you're a medium or a large section, yes, you're going to want to do that. For example, the Pittsburgh section actually has a statement of activities set up for each of the major projects. We run a compilation of the full section budget, but it has its own budget. The same thing is true if you have a back to school store. You really want to know by program, is that program costing you money? Is it bringing in additional money to the section? Or is it underwater? That's really all things you want to monitor. If you are a very small section with almost no programs, then this works for you. But otherwise, I would encourage you to look at each of your programs. And the other line that's missing from this, that is, if you're a medium or a larger section, is going to be a salary line. That's typically, for most organizations, the single biggest expense is our salary line. In this particular one, it's buried, my guess would be under supporting services, where it says admin and fundraising. That would be my guess where the salaries are buried. And that's fine. There's nothing golden about this particular income statement. It's just an easy one to use, which is why we listed it. You really want to modify it so it helps support an understanding among your board regarding your financial position.
Great. Thank you, Paula. There's a question. How are we defining medium here in terms of when you consider the size of a section?
I don't really have I wasn't really looking at it from a financial standpoint. That's a really good question. I would suggest if you have more than a couple of programs, that you really should consider yourself a medium-sized organization from a financial monitoring standpoint. Not from NCJW's language, because NCJW has very specific language in terms of what your top line revenue is. But what Patty and I are talking about is financial management. A medium-sized organization, in my mind, in Patty's mind, would be a section that has a couple of different programs, because you really want to track them separately.
Great, thank you. That's very helpful. And now I think we can move on.
Okay. And the next page is mine as well. So here we're going to go through some of the key questions you want to ask. And again, this is the questions that a president asks, a finance chair asks, the members of the finance committee ask, a treasurer asks, members of the board ask. How healthy is our reserve? That's really, how much money do we have on hand? Is really what that is. And taking a look at your reserve and understanding what's temp restricted, which means you can't use it except for a specific program or an event. What is permanently restricted if you have a larger fund, and what is unrestricted. So healthy would mean, in this instance, can we cover our bills? Can we cover our programs? Can we do with the money we have on hand the kind of programming that supports our mission? Can we go to the next page? These are additional key questions to ask. Does our section need an audit? And Patty, let me bounce this back to you. Would you talk to us about the difference between an audit, a review, and a compilation?
Sure. So within the accounting standards, there's 3 levels of outside assistance you can get from your accountant. The most restrictive and the most expensive is an audit. Like NCJW National, we have an outside firm, we have a full scope audit, and we have that done once a year. It's expensive. It's typically not done unless a funding source requires it or you have a bank loan. So in our case of our sections, I'm guessing most of them don't. Sometimes funders require an audit, so therefore that section may be going through an audit. More typical would be a review, which is sort of the middle. Imagine an audit, a review, and a compilation. In a review, the biggest difference is the auditor doesn't need to get corroborating evidence of an account. So in other words, in an audit, they have to write to the bank and say, Chase Bank, tell me how much money NCJW has in the account. In a review, the auditor just gets a copy of the bank statement from the financial person in charge of the section and relies on what information was in that bank statement. So corroborating evidence means you have to go to a third party. Using evidence as prepared by management or by the people who are doing it is in a review. And in a review, you ask a lot of analytical questions, but you don't actually, as I said, you don't do any in an audit, you might confirm large contributions from a funding source. You might confirm the restrictions on a grant. In a review, you would just look at the grant document. You wouldn't confirm any of that. So the cost differentials is really significant. And then a compilation is just getting some outside assistance to prepare your year-end financial statements so they look more professional. The reason that you would want a third party is depending on, again, for us, it's going to come down to funding sources. If a funding sources feels that a more professional outlook gives them, you will have a better outcome from it, then that would be the reason to do it. There is some fiduciary overall control, but you would want to weigh the cost of having a third party service versus why you need it. Paula?
Thank you, Patty. So that gives you some information so you can answer the question of, does our section need an audit, a review, or a compilation? Who should create the section's financial package? You really want to be asking that question. Patty and I have made a couple of recommendations. How often should the board review financial reports? I get to say this now for my 3rd time, at least quarterly. Does our section need a finance committee? My answer to that is typically yes. That is best practices. And again, doesn't have to be onerous. It can be 2 or 3 people. And does our budget reflect section's mission and purpose? That's a question we all should ask ourselves literally every year when we look at the budget and we approve the budget. We all know that our mission is to improve and safeguard the lives of women, children, and family. Our budget, what we do with our money during the year, the money we raise, needs to reflect the mission and purpose. Can we go on to the next slide, please? So here's in summary, essentially, because I'm being very aware of our time. We're at 2:15. Here's the roadmap to financial oversight. This is what Patty and I have been talking about. You want to create financial reports. The dashboard, which is a summary, goes to the board. Detailed reports, if you're a medium or a large section, those detailed reports go to the treasurer and finance committee. You want to create or build a budget annually. You start with last year's budget. You take a look at what it is you think you can raise. I typically do a top-down budget where I'm looking at the individual programs we have, how much money we think we can raise. And then I look at the expenses, and what we're aiming for on that net income line is literally as close to a 0 as we can. We do not want brackets. Brackets are not a good thing on a financial statement. We don't want to be hemorrhaging cash. But keep in mind that you can use your restricted fund, your temp restricted funds and your unrestricted funds to support your programs. We also want to review section's financial package quarterly, and that's the statement of activities or balance sheet. I'm sorry, the statement of activities or income statement, and you're going to look at it against budget and against prior year. and then the balance sheet for current and prior year. And then you're going to want to assess cash flow needs bi-monthly. And by that, I mean at least twice a month. You need to take a look at your bill payment versus the cash you have on hand to cover those bills. Somebody should be looking at that a minimum of twice a month. Even if you use something like bill.com, we have that through PNC Bank, for example, in Pittsburgh. There's 2 of us who look at that every single month. The checks are the invoices are processed, they go into PNC, and then the president and I as treasurer both look at them, and then I approve them. She takes a look at the approval, make sure that we have all the paperwork, and then she authorizes the payment. So somebody needs to be doing that at least twice a month. And can we turn the page? We need to monitor our revenue sources, which I just spoke about, which is primarily fundraising, programs, events. If you charge a membership fee, that's in there. That's usually a very small source. Monitor your expenses. And here, seek assistance, which is available from National. We've got staff people at National who can answer your questions. We have board members like Patty and I who can answer your questions. And the most important thing is that you're not alone. You're part of a network. There are resources available to you always. So that ends our portion of talking at you. So let's spend about 10 minutes going forward the other way, which is any questions which have come up.
There was one question that we saved for the end about the fiscal year. Can the fiscal year ever align with the calendar year and be January 1 to December 31st, or is there a reason for having a different fiscal year?
Patty, you want to jump on that one?
Okay, yes. So the answer is anyone can have a fiscal year that ends on a calendar year or a fiscal year that ends on June 30th. NCJW nationally has a fiscal year that ends on June 30th. It's funny because it came up recently. Somebody on our board was challenging it. The logic way back when, I think a lot of accountants encouraged nonprofits to go with the fiscal year end of June 30th, because then it balanced out. If you think of like United Way or the Jewish Federation of North America, they have June 30th year ends, and then the accountants did the work over the summer when theoretically they weren't so busy. So there was a financial reason, getting professional services, kind of getting your investment, and budgeting and all of that. So that's why it started. It also depends on when do you do your fundraising, and there's a lot of other reasons, but there is a logic in that. I'm sure a lot of you feel you get money in December because people personally like to write their checks for their fundraising, for their donations out to get the tax deduction. So individuals think about on a calendar year and the nonprofits are on a fiscal year, so it's confusing. So yes, the answer is yes, you can. You are allowed to change. And Paula, I don't know, does NCJW have a rule?
No, NCJW does not have a rule as far as I know, but I would encourage you, you can't as a board decide to take a vote to change your financial, your financial beginning and end. There's actually a process you have to follow. So you're going to have to reach out to your accountant to find out what that is.
You have to get permission from the IRS. I will tell you, it's not that isn't a game changer. It's not that hard to get because the IRS likes people to be on a calendar year. So you would have a short year, a 6-month year, and then you'd have a 12-month year. So that's right. From a logistics standpoint, so you'd have this short period of 6 months to get you to a calendar year end.
Right. It's not difficult, but you have to follow the process because the IRS is funny about that.
Yeah.
Any other questions that came up, Jane?
Yeah, there were some. Actually, Lindsay, if you wouldn't mind sharing the last screen of the slide deck, or the last slide, had the questions that were submitted prior to today's presentation. We can go through those. There they are.
You want me to take some, let me try, well, you think about the 501c3. I'm going to answer really high level on quick. Okay. I'm going to get you off the hook here. So as far as QuickBooks goes, QuickBooks has become a very common thing for nonprofits to use. So want to know if I don't know if anyone else on the call uses QuickBooks. If you guys want to throw that into the chat, that would be great. But I can tell you that it's becoming a very common go-to software for nonprofits. It's not perfectly aligned, but it works. And there's also now there's a feature called QuickBooks Online, and you would buy the version that's only online in the clouds, which does make it better for those organizations that switch treasurers. You know, if everyone once a year or every 2 years you switch treasurers and you have QuickBooks Online, then you're basically just, or if you're doing it yourselves, you're basically just exchanging passwords. So that would be the advantage of doing that. And it does help you. You can sync it with your bank statements. You can organize your receipts better, keep track of donors. So there are some real good features of using QuickBooks.
And it's a very simple, almost intuitive program to use. It's nothing to be intimidated by. It really is. It's very simple. There's a tutorial that comes with it. You can always go for a tutorial online. It's very simple to use. Let me jump into how often in a fiscal year should the budget be reviewed. Typically about 6 months in, unless, well, for example, in a pandemic year, there were a whole lot of sections that were reviewing their budgets last year, and it hit in March, obviously. So there were sections that all of a sudden in March, the bottom fell out, their funding dried up. So they looked at it then. But typically, barring another pandemic poo-poo or something else horrendous, typically want to look at it about 6 months. I do not recommend that you recast your budget at that point. I do recommend that you have an open, transparent discussion at the board level, saying, hi, this is where we thought we were going to be, and here's where we are now. And then I would have either your finance chair or your staff or your accountant do a projection through the end of the fiscal year. And that needs to go to the board so that you know where you're going to be. And if you need to change programs, if you need to cut back, if you have more money than you thought you needed, are there programs that you had thought about launching in the last quarter of the year, but you were too conservative? You can launch them. Reviewing the performance against budget isn't always negative. Sometimes it's positive. And how do we budget for something that is a new initiative? For example, online shopping. This is where, because you're not alone, you would touch base, you would get in touch with Jane, you would get in touch with somebody on Lindsay's team, and you would describe to them what you want to do, and they will put you in touch with other sections that are doing similar things. And that way you have a baseline, you have some idea of how to create a budget, what those budget lines are. I can't say often enough, reach out to the national staff. And if they don't know the answer, Lindsay has me on speed dial and she has Patty on speed dial for all things financial. We will get back to you as quickly as we can. If it is in another area, again, go to national. You'll get the resources of everybody on the board, as well as the experience of the staff. We have a wonderful staff. Now, let me go back to whatever things we need to do to stay in compliance as a 501c3. I would tell you to go back to Lindsay and to her team. If you don't get the information that you feel satisfied with, if there's more questions about this, we can do a separate seminar, because that really is a topic for a separate seminar. Any other questions that came up, Jane? I see the bottom of my screen flashing, but I haven't been trying to read them. Anything else that came up, Jane or Lindsay?
That's great. Thank you so much, Paula. And yeah, we're always happy to field those questions. We know, especially when it comes to 501c3, as you alluded to earlier, it can be state specific. There can be so much that goes into that. So that budgeting, there are so many of these topics that hopefully we will do webinars on in the future. And to that end, actually, I'm going to share a couple prompts. We'd love to hear from everyone in the chat, one learning or idea you're taking away from today's session. That's just about the amount of time that we have for today. Paula and Patty, thank you so much. Your depth of knowledge and the calm demeanor with which you present it is always so comforting, and we're so lucky to have both of you on the board.
Thank you.
Of course, The recording of this webinar will be shared over the next few days with everyone who registered, along with several resources. Please, Lindsay's going to launch the survey on your screen about this webinar.
And I just see separation of duties coming across the screen. Whoever is writing that, please just either get in touch with me or Patty, and we can talk with you about it very
Yes,
easily.
We'll absolutely put Lori in touch with you.
That was great.
Okay, that would be wonderful.
If anybody has any other constructive feedback they'd like to share with us, please email us at action@ncjw.org. We hope you'll join us next Monday, March 15th at 4:30 p.m. Eastern, 1:30 p.m. Pacific, for Ruth's Revolution Continues, an exploration of reproductive freedom in honor of Justice Ginsburg on what would have been Justice Ginsburg's 88th birthday. We'll honor her legacy and continue in her footsteps by furthering reproductive freedom and expanding abortion access. And we'll be announcing more upcoming leadership webinars soon. We hope to see you again in April for our NCJW Webinars Leadership Series. Thank you again to Paula and Patty for sharing their expertise with us today. Thank you all of you again for joining. Stay safe and healthy, and we look forward to seeing you again soon.